The Nifty is up 8% in 2023 so far. The auto index is up a whopping 24%. Now, this is largely because there has been a recovery in volumes and strong margins which have aided stocks. So let's start with the results calendar first, which is on your screen. In July, we have companies like Ashok Leyland, TVS Motor, Maruti, Tata Motors that will be reporting their earnings, on the dates mentioned on your screen. So what can we expect from the earnings this time around? Now, Q1FY24 will be a good quarter for the auto sector. Brokerage firm Jefferies is expecting the Q1 aggregate revenues to rise 16% year-on-year, boosted by higher prices that the companies have undertaken. Passenger vehicles and two-wheeler wholesales grew about 9 to 11% year-on-year in Q1, which was very good, while truck and tractor wholesales declined about 1 to 7%. So that was one pocket that didn't look very good. Brokerage firm Motilal Oswal says that exports seem to have largely bottomed out for the sector. Now, the big positive this time is the margin improvement for the sector on the whole. EBITDA margins will improve for the 5th consecutive quarter in a row for the auto universe. In fact, Jefferies says that the aggregate EBITDA is expected to rise a 49% year-on-year. Let's move on to some stock-wise expectations now. Tata Motors has been the biggest auto gainer this year, and the company is expected to report its 3rd consecutive quarter of a consolidated profit, while the company has already guided for Jaguar Land Rover's free cash flow to hit £400 million plus in Q1 of FY24. For players like M&M, there is very strong volume growth in the auto segment due to improving supply chain as well as stable tractor volumes year-on-year. That will aid the business. Morgan Stanley says that M&M is likely to see the sharpest margin expansion amongst all the four-wheeler players. And finally, for two-wheelers like TVS Motor, the domestic two-wheeler volumes witnessed a sharp growth this time, up almost 30% year-on-year, but exports were still under stress as volumes declined 33% year-on-year.